Hello guys and welcome to the Trading Fanatic channel. My name is Iliya and in this video I'm finally going to break down the Fibonacci retracement and extension 2, as this has been a massively requested topic by you guys. So I'm going to show you how I personally use it, how I implement it into my charts, what I am looking for on the Fibs, how to set the Fib tool because you can see this is very messy, and how do we implement it into the live market. So if you're excited about this, make sure to hit the subscribe button first before continuing to watch this video. And as you did right now, let's head straight into the topic. Alright, so let's first break down the Fibonacci 2. As you can see, we have a lot of colors here, a lot of lines, and we have a level that we really don't need to use, and we have some levels on the bottom. So we double click on the tool and we have all of these stats. So here you have all the stats, you have background, this should be on 0 if you want, you have prices and levels. So if you want the price to appear here, you should have your price ticked, and if you just want to see the level, I personally use like this and with percent, so you see which percentage is being tapped. So labels, I like them on the right because you can see on the right it looks better, and if they're on the left they will mess up with your charts. So percent, no background, we don't need the 23.6% Fibonacci. And then basically those are our Fibs, guys. You can remove this trend line as well by clicking this, and here you use your very clear tool. So personally I will trigger my personal one, which is this. So you can just have a look at it now and copy the stats. So take a screenshot of this one. You can see I have levels, values, I should do it percentages, no background, and those are my key levels. Make sure to include minus 0.27 and minus 0.62 because those are the most used Fibonacci extensions, and they will be very useful for your long-term targets. As well, 78.6, I will explain how I use the 78.6 and 38.2. You can have 0.71 as well, but as you can see, it gets pretty tight in here. So I just decided to let go of the 71.8, from the 71. And so this is basically my Fibonacci tool. Let me know if you have any questions, but make sure to copy everything that is here so you will have a nice and clear tool. Okay guys, so let's get deeper into understanding what is Fibonacci. So basically Fibonacci are some numbers. There are a sequence of numbers. There was a scientist, or I don't know what he is, named Fibonacci. So he came up with those numbers, and actually his finding looked like a nice spiral, something like this, and there were some numbers and they go to infinite. So this is basically Fibonacci. You can do your own research on this one. So the largest levels, the most psychological and the most important levels are the 0.382, 0.50, actually 50%, 61.8%, and 78.6. Those are the levels that are used mostly by traders. And just being logical, if they are used by most of the traders, which this means that when price gets into those areas, price should react, because price reacts when there are people buying and selling. So when price goes to the 50%, there are a lot of people buying this market. So we should start seeing some bullish momentum here on this occasion entering. However, not every occasion price action likes to pull back down to the 61.8%, which is considered to be the golden Fibonacci level, 61.8. You can see my color here is orange, and the 78.6 is like the maximum one. So personally, a rule of mine is if price action breaks below the 78.6, I do not look for buys on this occasion. So if this continues to push to the downside, break and close below the 78.6, then most of the time you will have a reversal on this market, or price will come back down for a double bottom for just to try to push probably to the upside. But usually those occur rarely when you have equal lows and highs. So we are always looking for healthy trends that are really showing us nice confluences. So 38.2. So I get asked a lot about 38.2. So 38.2, guys, usually gets tapped after massive impulsive legs. So if you have a very massive leg to the upside without any form of pullbacks, then most of the time you will get just a slight pullback because there are so many buyers entering this market, and they really don't want to drive price that lower. And usually the 38.2 will be tapped. So if you have a massive movement to the upside without any signs of bearishness, and all of a sudden it starts to reject, this means that there are people taking profits or just taking partials of their positions, and we will see a slight pullback, just a slight pullback, and usually this will be the 38.2. So that's a tip from me. That's how I use, and that's why I have the 38.2 here, and I look for it to be tapped after massive impulsive legs. Next, 50%. So 50% is usually a very good fib level. Why? Because this is the 50% of the whole leg. Usually price action loves to retrace at least half of this leg, which really makes sense, because if this leg is going to make you profit in the long term, you don't want to for it to go down to your entry point. So just a kind of a brief breather of price action is the 50%, and is a very nice level. And the 61.8 comes later, which is like the golden one and gets you the highest probability. So why it does get you the highest probability? Because you expect if price action taps the 61.8% that it is not going to continue lower, and you're having the best risk to reward ratio because you entered at the lowest point of this retracement. So personally, another tip from me, I use kind of an area in between the 50 and the 61.8%, because you never know where exactly price action will find support. It will not always tap the exact level, the exact Fibonacci level, the exact number. Those are zones. Remember, all the levels, the support and resistance lines and everything, they are zones. They are areas of the market where there are people buying and selling. So this is briefly with the fib numbers, just to sum them up. 38.2 is for massive bullish or bearish legs, and when you don't expect too much of a pullback, because after such massive legs, usually you get just a slight retracement. 50% is half of the leg, which is a very good retracement, and you can really watch for opportunities there. And if price action gets in between the 50 and the 61.8%, taps the 61.8%, gives you the signs of rejections, and whatever you're looking for entries, this is the best setup you can take. This is considered the golden level, and the area in between the 61.8 and the 50% is a massive confluence to your trade if it even corresponds to a supply and demand level or support and resistance level in the past. So that's about the levels briefly. So guys, you saw that I had some letters in here, A, B, C, D. So I'm gonna explain this right now. So usually this is kind of a formation here. You can find it here, A, B, C, D pattern. You have other ones and Elliott wave theory as well. So usually an ABC is a 3-wave pattern, and you can see A, B, C. I have a D here, but that just because I wanted to explain it a little bit more clear. So usually the A wave happens. Let's try to illustrate this. So price was pushing down, and we had a double bottom here of this market. So imagine this, and this whole wave here, this whole AB wave broke this level here, this structure. So when a structure like that is broken, this means that we're having a reversal and there is a trend shift. So then from AB, you pull your fib. So you grab your fib here and you plot it like we have. And when you start seeing here that price is finding resistance, then you have your AB, and your C retracement is your best opportunity to enter. Usually this is 1, 2, 3, 4, and then you have something like 5, and you have about three impulsive moves or something like this. That is the Elliott wave theory, but really don't get too much into it. make sure you wait for some impulsive leg first, that is breaking structure. Then you plot your fib and you wait for the retracement to get reached. And as you can see again here, this is just an example. We're having confluence. The 50% aligns with this broken structure, and this will always happen, guys. You just have to learn to spot it. And we have A, B, C. When C comes, this is your golden level here. The time when you enter your trade. So let's say you enter your trade. Your stop loss is below the 78.6, because if price gets below the 78.6, usually this trade is not going to work out. Now it's time to touch on extensions. The minus 27 extension is usually your first TP. Usually I take profits first at the high, at the first high, and then you can have like 3 take profit areas. So those are some numbers, again, psychological numbers that are really well respected if you plan to swing the trade. Usually when you have an ABC formation, you would expect that price action will continue up to break this high, because if it breaks this high, then this turns into an uptrend. And then if you have ABC formation happening, then you have your trend line plotted as well. And that is when price breaks this, fulfills the 27% or the 62%, and then you have a new A leg. Then you plot your fib again, and you have a new Fibonacci sequence, guys. That's when you wait again for price. That is when you have more confluence. You can see here, this high acts as, it was resistance, now it acts as support. You have your trend line, you have your 50% fib here. Let me delete this. So you have A, B, C. C should come in here right now. Let me do it like this. So we have A, B, C, and C corresponds to this broken resistance, which is now support, corresponds to the 50%, and corresponds to the trend line. And then again, guys, the same process. You trade this, take this trade and ride it up until the 27% or the 62%. And just a little tip from me: price action usually first hits the 27, then has a small pullback, and then fulfills the 62%. But the 62% takes a lot of time, so I would advise you just to target the 27% extension. So I really hope this makes sense, guys. So just to sum it up again, first, in order to have a fib, you need an impulsive leg. So this is your first thing you have to have. Then you need price to see price action starting to find resistance and to push to the downside. So when you see price action starting to push to the downside, that is when you plot your Fibonacci. Then you see where is your 50 and 61.8%, and you will decide where you're going to enter. So let's delete everything. So we have our push. Then price action starts to consolidate a little bit and starts to push down. That is when we plot our fib. We will have some price action to the left, so make sure to always try to correspond the fib levels with price action on the left. So we tell to ourselves, okay, I want to see price action pull back around the 50% because I have a nice level here on the left. Then price action pulls back here and leaves you a nice candle. So let's say you wait for pin bar, you're having your pin bar here with a wick. You enter in this trade and you ride this pair up until the 27th extension, and you wait for price action to find resistance again, to push a little bit to the downside. Then you delete this fib. It can stay. This is another tip from me. You mark your 62% extension. Why? Because it should be fulfilled at some point in time. Then you draw this one, and most of the time you will see that the 62% extension will correspond to the 27 extension of the new leg. So in this occasion it didn't, but this is just a drawing. Then again, guys, you wait for the same process and you do this all over again. And that is how simple fibs are. And right now, let's go to see at the charts how we're going to implement them real time. So let's have a look at the random chart. So this is NZUSD. That is where I was drawing the drawing. So looking at this market structure, so we have a perfect example here. So I want you to search for moves like this, because this move really tells you that there are buyers and that trend is going up. And you can see here that we had a very nice zone being violated. So that was a tip I gave you. Wait for zones, for levels to get violated with impulsive moves, with impulsive legs. So we start the process. We plot our Fib. And what do we wait for? Well, let's say we see that there is a very nice zone in and around here that got broken. So we want to see price action pull back to the 50%. Boom, price action reaches 50%. When it reaches 50%, what you start doing is you start monitoring for your entries. So you had a very nice pin bar here, 1, 2, 3 formation, push to the upside. You have 1, 2, and even 3 opportunities to enter long on this market. You enter your long position and then you wait for the market to take off. The market takes off and your first target is achieved, which is this level here, where this is the most recent resistance. So always make sure to take some profits here. And your longer term target is the 27 extension and potentially the 62. So you saw how easy it is, A, B, C, and currently trying to fulfill D. So right now, if we have a fresh look at this chart, we saw that this resistance was broken, right? So we're having a nice bullish leg. How would we draw the Fib here? Well, very simple, guys, and you should know about it. You should know it by now. We're plotting this level like this. So what can I see currently is that, again, the 50% corresponds to a very nice zone in the market. You see here we had support, price broke, retested, and found massive support to the upside. So this area, this level is of interest to me. So currently, I will be looking for price to reach this, to give me the same signals I'm waiting and the criteria I have to execute this trade, and I will be writing this to the 27 as well. If we plot this Fib again, just to have a look. So you can see how the Fibs, most of the time they will start corresponding. So you see this, both of the 62% are very close. So this is a very high probability area of price getting into, and the 27% are near as well. Let's have a look at another example here on this chart if we have. So again, nice impulsive leg breaking structure. So this is a nice impulsive leg. So let's draw a Fib, something like this. Usually, as I told you, after massive legs that haven't had any kind of a clear pullbacks, we should expect the 38.2 level to get tapped. And what did we have here? A massive rejection at the 38.2 and a very nice area here of resistance being formed. We had a double top here as well. So you can see how perfect Fibs are. And another very good detail is that price action almost tapped the 27% extension. But what I told you earlier is that price will not always respect like the exact numbers. So you can see here we had 0.62, 0.18. Well, price action is not supposed to tap the exactly at this number. And you can see it came close just by a few pips. So I'm not really going to measure that. 62% wasn't fulfilled because we had a shift of structure. So again, you have a very nice leg to the upside. It was failing to break this, but this massive leg to the upside indicates something. So you can draw a Fibonacci just to expect something. Then we had 38.2 holding again, and then we had the push to the downside. Then we have another Fib, because when price action breaks, then you can have a longer term Fib. And what this Fib did, supported at the 61.8%, had a little manipulation here, but take into account this, that it failed to break below the 78.6, which is the most important thing for me. And from here, it skyrocketed, fulfilled the 27 extension, and it is nearing the 62, which eventually got fulfilled here. It just got fulfilled. So we're currently expecting some sort of pullback. So this is it, Fibs, guys. You can use them on every time frame. Personally, I would advise you to use them on the 4-hourly and on the daily. So daily would be for massive pullbacks, which do not always happen. So I keep using Fibs on the 4-hourly, and you can even use them for a very short-term trends. For example, this one. Do you see it? We have an ABC formation here, perfectly tapping the 50% Fib. And then this price action continued to roll down, fulfilling the 27% extension. And then we had the pullback. So what is this pullback? Well, this is another Fib. So this is your new leg here. you plot your fib, you can see price action pulled back to the 38.2 and started to fulfill all of these levels again. And eventually the 62% got fulfilled. And when the 62% gets fulfilled, we usually get some pullback on this one. And again, we had a nice push to the upside here. All right, let's plot the fib. Plotting the fib. So on this occasion, guys, you see that this fib price action violated the 78.6. So you don't have high probability of this trade going to fulfill the 62 or 27 or just continuing up, because you see price action push to the upside but fails to break structure and continues pushing to the downside. And you can see how powerful fibs can be, because just by a break of the 78.6%, it indicates that there are not enough buyers to push the market up. Thank you guys for staying up until now. I really appreciate it, and I really hope you found something valuable from the video and you're going to step up your Fibonacci game right now after watching it. So I just quickly wanted to show you the study guide, which is just $10 and it has tons of knowledge in it. We have videos now. You can see we have a lot of strategies in here, and after every single strategy you have a video explaining in depth everything you have to know about this. And this is a very long structured approach to the markets, and you have everything you need to know if you're just starting out. So I would really recommend you to grab this one and start learning. And as well, make sure to grab the mastermind class where I will personally mentor you. So make sure to check this out. I will leave links into the description, so make sure to check it out and let me know what you think if you need further explanation. But we're having a lot of members starting to succeed in the markets, and their trading has been drastically improving, and I'm really loving to see that. So thank you for staying up until now again. I really appreciate it, and see you on my next video.